Stock portfolios are going to continue to fall. Most people who own stocks, unfortunately, own the most overvalued stock. Big tech, for example, those are the stocks that went up the most because interest rates were zero and people thought that inflation would be low forever. Well, now that interest rates are not zero and inflation is here and getting worse, those stock valuations are coming down. I think they still have a long way to fall. So most people will lose money in the stock market. I think they'll fare even worse in the bond market, even though yields are higher now on bonds. They're not nearly high enough to offset inflation. So people are going to lose a lot in bonds. So they have to start thinking outside the box and look towards alternative types of investing. You can still invest in stocks, but you can't invest in the indexes that are so dominated by overpriced tech names. You have to, more discriminating in the stocks you buy. You have to select the stocks based on value and dividend yield and just build your own portfolio rather than just buying these indexes. And I think the best values are had abroad. The highest dividend yields are outside the U.S. And I think that also gives you the benefit of a hedge against what I believe is going to be a very weak U.S. dollar. The dollar is up on the year, but it's losing those gains rapidly. But I think over the next several years, we're going to see a very weak dollar as the markets come to terms with the reality that inflation is not only going to get higher, but it's here to stay. It's not going back down to 2%. And that's going to result in a run on the dollar, I think, and on U.S. dollar-denominated assets, especially when the Federal Reserve actually has to go back to quantitative easing, which is creating more inflation because the economy gets so bad that it actually turns into a financial crisis. Just to point to the jobs that are being lost, these are full-time jobs, high-paying jobs with benefits. The jobs that we're creating are part-time jobs with low pay and no benefits. So it's not, like an even trade-off when you look at the jobs we're losing and the jobs that are being created to replace those lost jobs. But I think this is just early in the layoffs. I think the layoffs are going to be very widespread. And in fact, some companies are going to be laying off 100% of their workforce because they're going to be going bankrupt. But a lot of companies are going to be laying off a lot of workers to avoid going bankrupt because they have to start cutting their costs. And one of the costs that they can cut is labor. And so when you cut your labor, you have to eliminate employees. And the reason for this is that companies' real sales are going down because their customers are broke, so they can't afford to buy as many products. And so the companies selling those products or services don't need as many workers to help provide those goods and services. And employers are looking at higher interest rates if they've borrowed money, which a lot of employers have borrowed money to buy capital equipment that they might need. Their rent might be going up on their office space, and their other raw material costs are rising. And so they have to figure out how to get by because businesses need to generate a profit because that's the way the owners of the business make money off the business. And if they don't have a profit, they have to figure out how to create one or they're going to go out of it. And so one way would be to scale back the size of the business, and that means reducing your headcount. And that's going to go on across the economy. And of course, there are a lot of companies that never should have been created in the first place, that only were created as a consequence of monetary policy, of cheap money and the casino-like environment that the Fed created in the stock market. You have a lot of companies that have never made any money, but they have a lot of employees. How were they able to pay these employees if they had no money to pay them? Well, they were selling stock to investors and they were using that money to pay their workers. But if the appetite for shares of money-losing companies is no longer there, a lot of these companies aren't going to be able to stay in business. And to the extent that they can stay in business, it will only be if they can dramatically downsize their operations and start generating a profit. And that probably means they have to eliminate most of their workforce.
Like what kinds of companies are you talking about?
Well, a lot of these social media type companies or tech companies or, last year, I think we had a record in money-losing companies that went public. I mean, normally you wouldn't go public until you had been able to prove the viability of your company, that you're a profitable company. You just want to get more money so that you can scale it up. But you had all these companies that never proved anything other than the fact that they can lose money, and they went public. And I think a lot of these companies are going to go from IPO to bankruptcy in a relatively short period of time. It was only record spending because of the inflation. And if you adjust it for inflation, it wasn't a record at all. Spending was down because prices were up. So if you're paying higher prices, then obviously you're spending more. But you could be buying less. You're just paying more for what you're buying. And that's what happened on this Black Friday or Cyber Monday. But I think the rest of the holiday is going to be a dud from the point of view of the retailers. I think people are going to spend less. And layoffs, I think, are going to pick up quite a bit in January because I think employers are reluctant to lay people off going into the holidays. I mean, nobody wants to be Scrooge and do that. So I think that a lot of decisions are postponed to January. And I would expect a lot of people are going to be getting pink slip if they still mail those things out. The vast majority of Americans who buy homes use a mortgage. They don't have the money to buy a house. They don't even have the money for a down payment. The average down payment has been, I think, 5%. It used to be 20%, but people don't have the savings to put down 20%. So they're borrowing the money. So the most important factor in home affordability isn't the price of the house, but the mortgage rate. And mortgage rates a year ago were in the low threes. Now they're almost 7. You've had a doubling in the interest on a mortgage. And that dramatically reduces how much somebody can pay for a house. And so home prices are going to have to fall sharply because that's the only way anybody can afford to buy them. Now, of course, there won't be a lot of homes on the market for a while because people are not going to build them because it's too expensive to build them and people can't afford to buy them. And a lot of the people who own homes don't want to leave because if they sell their house, they can't buy another one because the mortgage on the new house could be double the mortgage they have on their current house. So they're kind of stuck. So that's helping to mitigate the supply a bit. But ultimately, I think the prices are going to be determined by demand and what people are able to pay. And with higher mortgage rates, they're able to pay a lot less. So prices are going to come down a lot. And that means home equity is going to vanish for a lot of people who, are in their homes. They're not going to have all that equity. And that's going to have a big impact psychologically on their saving and their spending, on their ability to use their house as an asset for a loan or something like that. But even though home prices are going to be coming down, the cost of home ownership is going to be going way up because even if you buy a house that's gone down 20 or 30%, based on where mortgages are, your monthly payment will still be higher than the payment would have been had you bought the house a year or two ago at a lower price, but with a much lower mortgage. But the mortgage is not the whole cost of home ownership. You got to pay insurance. Insurance rates are skyrocketing. I mean, the insurance on my own house in Connecticut in 1 year was up 40%, and people have sent me copies of their homeowner insurance that has gone up a lot more than that. So insurance costs are skyrocketing. Maintenance costs, if something goes wrong with your house and you need to fix it, the cost of repairing anything, the parts, the material, the labor, all of that has gone way up. Property taxes are going up. Utility bill, the cost to heat the house, to air condition, everything is going up. So home ownership is getting a lot more expensive, and so fewer and fewer Americans will be able to afford to own a home, let alone buy one. From that perspective, to have a larger home where you can work from home and you have more room for your kids if they're homeschooled or something like that. But I think that a lot of the people who rushed from the city, and maybe they were renters and they bought places out in the country or the suburbs, they had no idea how expensive it really is to maintain those properties. I own some homes and I can tell you from experience, they're money pits. They cost a lot of money because stuff is constantly going wrong with your house. People probably bit off a lot more than they can chew. And if some of these people have buyer's remorse and maybe they want to sell their property, it's going to be difficult in an environment where interest rates have doubled. And of course, a lot of other potential homeowners are going to be losing their jobs. So unemployed people have a hard time making their mortgage payments. It was one of the bubbles that was a consequence of Fed's cheap money policies. And when we spoke earlier about a lot of companies that I think are going to be going bankrupt and laying off all their workers, that's pretty much going to be the case for almost every company in crypto and blockchain. These companies never should have been started, and they're going to go out of business, and all their employees are going to lose their job. And a lot of those employees own crypto, and they're going to be selling their crypto to pay their rent, to pay their bills. The air is coming out of this bubble. I mean, Bitcoin on its highs earlier in the year got to almost 70,000. We're up to 69,000. Now we're below 17,000, but we still have a long way to fall. The market cap of all the crypto tokens was close to 3 trillion at its high. Now it's just above 800 billion, although over 100 billion of that I think is stable coins, which are just now tokens that supposedly are backed by the dollar, like Tether, but who knows if Tether is actually back. That could be another crisis in the making. But the reason a lot of these crypto exchanges went bankrupt is because they took on debt. They used a lot of leverage. That's how they were able to offer yield to their customers who were depositing their tokens, and they were getting paid. They didn't realize how much risk these companies were taking in order to generate that so so-called yield. But now that these crypto prices are imploding, the whole bubble is collapsing. And I think there's still a lot of people that are hopeful that Bitcoin, for example, is going to come back and it's going to make new highs, go to the moon. But those days are over. Bitcoin is crashing back down to earth. It's not crashing yet. It's kind of slowly grinding its way lower, but it will pick up the pace of the decline, I think, in 2023, especially when Bitcoin gets below 10,000. I think there's a lot more leverage that needs to come out. I think a lot of people are going to get margin calls, or people are going to have to repay some debt, and Bitcoin is likely to be the collateral that needs to be sold. But I just don't see the buyers. You know, we had a peak buying in 2021. FTX wasn't the only crypto company to buy a Super Bowl ad. I think there were 3 others, but crypto companies were putting their names on sporting stadiums. They were paying off pop stars and athletes to pump their tokens. They even suckered in a whole country, El Salvador, into making it legal tender. You had the NFT craze.
Oh my God.
A lot of stuff happened at the peak of the bubble, but all that has to be unwound as the air comes out.